Welcome to the Pulse of the Market, where we break down the biggest moves of the week. We start with a massive play from Apollon Wealth Management, LLC, who just revealed a substantial stake in Alphabet Inc. With holdings valued at over $93 million, this firm is betting big on the tech giant, securing hundreds of thousands of shares and solidifying Alphabet as a cornerstone of their investment portfolio. Investors are watching closely as these institutional moves signal strong confidence in the company's future dominance in the information services sector.
Tired of dropping your phone or struggling to prop it up? Meet the PopSockets phone grip with expanding kickstand in black, your new must-have accessory. Don't miss out. Grab yours today. Click the link in the video description to shop now on Amazon.
Next up, we shift to the global stage, where SAP is looking for a major turnaround, while Aspermont continues to impress in the commodities market. It is a wild ride, as Alphabet makes headlines for its strategic bets on Elon Musk and the massive potential behind the SpaceX project. Competition for cloud capacity and high-performance chips is heating up fast, and these companies are right in the center of the strategic data race that is defining the current investment landscape. The momentum keeps building as Premier Path Wealth Partners LLC just announced an increased position in Alphabet Inc. They are not alone, as major players like State Street Corp and Capital World investors are adjusting their heavy stakes in the tech behemoth. With institutional investors holding over 40% of the company and insiders making notable moves, the data behind the stock is shifting in real time, making this a crucial week for anyone tracking the information services market. Finally, we take a closer look at SpirePoint Private Client LLC, which has grown its stake in Alphabet Inc. to nearly $30 million. From recent earnings reports beating expectations to major brokerage firms adjusting their price targets, the sentiment around Alphabet remains a hot topic for analysts everywhere. If you want to stay ahead of these trends and catch the next big tech move before the rest of the world, make sure you hit that like button, subscribe to the channel, and ring the bell for instant updates. Ever wonder where the big money actually goes when it wants stability in a volatile market? Today we are peeling back the curtain on Alphabet, the parent company of Google, and looking at why institutional investors are doubling down on the tech titan. Recent SEC filings reveal that Apollon Wealth Management just increased its position in Alphabet, holding a massive $93.47 million stake. But they aren't alone. A wave of hedge funds and institutional players, including firms like BOCHK Asset Management and Triad Wealth, have been busy expanding their footprints as well. Let's talk numbers. Alphabet isn't just a search engine, it's a $4.1 trillion powerhouse. With a recent earnings report that crushed analyst expectations, delivering $2.82 EPS against a projected $2.57, it is clear the engine is still humming. But investors are paying attention to more than just the growth. They're watching the capital returns, too. With a dividend program now in play and a net margin north of 32%, the financial health here is undeniable. However, it is not all sunshine and rainbows. We are seeing significant insider movement, with executives like CEO Sundar Pichai and Director John Hennessy trimming their positions recently. While it is standard practice for leadership to diversify, seeing millions of dollars in stock sales naturally makes any retail investor take a second look. On the analyst front, the sentiment remains largely bullish. Firms like Tigris Financial are calling for targets as high as $415, and the consensus remains a moderate buy. But here is the kicker. Even with all this institutional backing, some top-tier analysts are suggesting there are whisper stocks out there with even more upside potential. And notably, Alphabet didn't make that list. Is Alphabet still the ultimate portfolio anchor, or is the best growth now happening elsewhere? If you found this breakdown helpful, hit that like button and subscribe for more deep dives into the stocks moving the market. Before you make your next move, remember, the data shows the trend, but your research drives the decision. What's your take on Alphabet's future? Are you buying the dip or taking profits? In the world of high-stakes investing, information is the ultimate currency. And right now, The markets are screaming that AI, data centers, and cloud infrastructure are where the big players are making their moves. From Microsoft to NVIDIA, billions are pouring into the backbone of our digital future. But how do you filter the noise from the real opportunities? Today, we are breaking down three distinct narratives. A German software giant in the middle of a massive pivot, a hidden Australian gem in the commodities sector, and the ultimate bet on the final frontier. First, let's talk about SAP. After a rough ride that saw the stock shed 50% from its mid-2025 highs, the mood in Waldorf is shifting. CEO Christian Klein is playing the long game, embracing short-term pain to drag a legacy software titan into the AI era. With cloud revenue climbing and analysts at HSBC signaling a buy with a price target of €182, the question isn't just whether SAP can survive, it's whether they can dominate again. Keep your eyes on their latest earnings report. It could be the catalyst that confirms their transformation is working. Next up, if you like stories about evolution, you need to look at Aspermont. This isn't just an old-school media company from 1835. It is a lean, data-driven engine focused on the global mining and commodities market. By shifting to a subscription-based model and leveraging their Mining IQ platform, they are becoming an indispensable partner for giants like Rio Tinto. At a market cap of around 23 million Australian dollars, it's a tiny player with a massive moat. If you are looking for a classic turnaround story with operational leverage, this is one to watch closely. Finally, we have to talk about Alphabet. We all know they are a data powerhouse, but their smartest move wasn't just search. It was their 2015 bet on Elon Musk. By securing a stake in SpaceX, Alphabet essentially positioned itself to capture the potential upside of the biggest IPO in history. As SpaceX continues to innovate, Alphabet's indirect exposure makes them a fascinating, Mag 8 play for the risk-conscious investor. So what's the bottom line? The market is a tightrope right now, but volatility creates opportunity for those paying attention. Whether it's SAP's radical pivot, Aspermont's digital transformation, or Alphabet's strategic grip on space tech, the path to returns is paved with data. Make sure to do your own research before jumping into any position, and remember, fortune favors those who prepare, not just those who react. What's your take? Drop a comment below, and don't forget to hit that subscribe button for your daily dose of market intelligence. In a world of rapid change, are you positioned to capitalize, or just watching from the sidelines? Is Alphabet still the king of the tech hill, or are the heavy hitters quietly shifting their focus? Today, we are breaking down the latest moves surrounding Alphabet, and the data paints a very interesting picture. First, let's talk about the big money. Premier Path Wealth Partners just boosted their stake by nearly 6%, signaling they are doubling down on the search giant as their seventh largest holding. And they aren't alone. Institutional giants like State Street, Capital World, and Invesco have been stacking up millions of shares, keeping institutional ownership at a massive 40%. It seems the smart money is still betting big on the Alphabet ecosystem. However, it is not all one-way traffic. If you look at the insider activity, you'll notice some significant selling. Insider John Kent Walker recently offloaded a massive chunk of his position, and major shareholder 2017 GP LLC has also moved to sell millions of shares. While some might see this as a red flag, remember that insiders sell for many reasons. Sometimes it is just time to cash in after a strong run. Speaking of performance, Wall Street analysts are feeling incredibly bullish, with firms like Wedbush, Baird, and Phillips Securities all bumping up their price targets, some as high as $395. The sentiment remains overwhelmingly positive. We are looking at a consensus, moderate buy across the board, backed by solid financials. Alphabet smashed expectations in their latest earnings report, posting $2.82 in EPS, and crushing revenue targets with a staggering $113.83 billion. With a $4.1 trillion market cap and a rock-solid balance sheet, Alphabet remains a foundational player in the tech space. But here is the million-dollar question. With so many analysts looking elsewhere, is there more value to be found? We have identified 5 stocks that top-rated analysts are currently prioritizing over Alphabet, and you might be surprised by what is on that list. Check the link in the description to see our exclusive guide on the top 5 stocks to watch right now. Do you think Alphabet still has room to run, or is it time to diversify into the next big thing? Drop a comment below, and don't forget to subscribe for the latest market insights. Remember, in this market, being informed is the only edge that matters. Is Alphabet still the king of the tech jungle, or are the big institutional players quietly shifting their focus? Today, we are breaking down a massive move by SpaceX Private Client LLC, which just beefed up its position in Google's parent company to the tune of nearly $30 million. But they aren't the only ones watching closely. From hedge funds to legacy institutions, nearly 40% of Alphabet is now held by institutional investors. It makes you wonder, with big money moving in, what do they know that the retail market is still catching up on? Wall Street is certainly having a field day with Alphabet right now. We have heavy hitters like Goldman Sachs and Bank of America boosting their price targets well into the $370 range, signaling a strong buy sentiment. Sure, we have seen some mixed signals and a few hold ratings popping up, but the consensus remains a firm, moderate buy. And it is easy to see why when you look at the fundamentals. Alphabet isn't just a search engine anymore. They are a multi-trillion-dollar juggernaut with a debt-to-equity ratio that is impressively lean at just 0.11. Now, let's talk about that earnings report. Alphabet smashed expectations last quarter, delivering $2.82 per share against the predicted $2.57. With revenue hitting over $113 billion, the company's profit margins are looking incredibly healthy at 32.81%. Even with CEO Sundar Pichai selling off a portion of his shares, which is standard practice for executives, the sheer scale of their operation, from Google Cloud to their dominance in advertising, remains virtually untouchable. However, it is not all smooth sailing. There's a lot of noise out there, and top-rated analysts are actually whispering about 5 other stocks they find more compelling right now, stocks that aren't even on the Alphabet radar. It goes to show that in this market, you have to look beyond the big names to find the real hidden gems. Are you betting on Alphabet's continued dominance, or is it time to diversify into some of the under-the-radar plays the pros are eyeing? If you found this breakdown useful, hit that like button and subscribe for more deep dives into the stocks moving the needle. Remember, the market never stops, and neither should your research. Stay smart and keep watching those trends.